Hey everybody, TG Watkins here with simplertrading.com, and this is your Daily 5. All right, so one thing I wanted to talk about was the overall condition of the market. I think that what's happening, we're seeing a bit of a stealth bear market. Obviously, the, the NASDAQ and the S&P are at all-time highs, basically. They look strong, they look good, but then we get into some of the breadth indicators. We look at some of the stocks that I've shown here. We see the percent below all-time closing highs, and these are some major companies. I'm sure everybody out there knows every single one of these companies. And look at how far they are down from their all-time highs, anywhere from 37 to 85%. And these are big, big deals that a majority of stocks are this far down despite the markets being so high. And then we look at the ARK. Now, say what you will about ARK, just going to be showing you some examples because this does kind of help represent a different sector of stocks and actually kind of some small caps. And they look at their percent below their 52-week highs. This is an issue. And you can see 90 to 57%. This is massive. And obviously, we're seeing it represented in ARK and how they are doing with their ETF. But the thing that we can look at otherwise is the IWM. And the IWM did break out after going sideways and flagging into support for about 8-9 months or more. We got a nice breakout, and that was fantastic. We actually saw a good bump in a lot of names out there, and things were looking good. And we were making some trades and saw quite a few names pop up. And then it got a little overbought. Fine, very happy about that. Something that's going to be breaking out, of course, is going to have a lot of momentum and energy behind it. It's probably going to get a little overbought. And then what I was looking for is, okay, we're just going to look for the natural ebb and flow of price to come back down. And I want to see it pull back into support to confirm this trend in this trade. And you know what? This is why we do what we do, because when it came back down, it did not hold support. I was looking mostly at the daily 50, maybe a little bit below it would have been fine. And you know what it did when it got to the daily 50? It broke, and it broke hard on big volume. So this is something that we need to really pay attention to. And I think that it has changed things from being positive and over moving averages that can act as support to now being negative and actually using these moving averages as potential resistance. So the daily 50 is what I'm looking at over here. And we are still basically battling it out with the IWM. We are not finished with this pattern. If this happens to go up, we will start to see it. If any of you guys kind of know my patterns, we're looking for the elf shoe, which is the leg, the heel. We just had the arch of the foot, and we're looking for the ball of the foot someplace. And if it holds, then we can get price to go back up. But if it does not hold, then this double bottom is just a resting place until price goes lower, and we could start seeing some more degradation in something like the IWM, which I think is going to be making it pretty hard on the rest of the market. Part of the breadth indicators are also showing that the S&P, the NASDAQ, whatever, are 70% of their gains over the last 6 months have been in 4 stocks. I'm sure you could guess what those 4 stocks are. So we're seeing a very difficult situation out there. There just aren't a lot of good stocks to pick from on the long side. But case in point with that, now Tesla, obviously it's doing great. It's up. It's had massive moves like this. But since then, it's just been too much. And what it needs to do is it needs to come back down and start finding some support, which typically for me is going to be the daily 50. Now, here's where the Moxie indicator comes in. So you don't get faked out right in through here thinking that price is going to start suddenly moving up again. And what you do is you look here on the hourly time frame, and this is the real benefit of the Moxie indicator and how it helps me trade so that I actually don't lose money on bad trades like this, so I don't step into a false situation. This is what I call an inverse trampoline move. And what that is price should not be over the 50, which is the magenta color line here on the hourly chart, while the Moxie indicator is below 0. So when the indicator is below 0 and momentum is negative, and that's what it's trying to tell you, then basically any up move over the 50 is going to be a false situation. Yes, of course, there can be moves, but as far as a next new trend, it's not going to happen because this is an inverse trampoline move. And you can see that the Moxie indicator had stayed negative the entire time. And sure enough, price finally broke down through the hourly 50, bounced a little bit, did bounce at the daily 50, the next tree branch of support. But then what did it do? Ran right smack into the underside of a downtrending hourly 50 with the Moxie indicator still below 0. So far, all this stuff is resistance. And the only question we have left is the daily 50 going to be support? And if it is, great, we can look for a long later. but we're just not there yet as far as any kind of support to move up. Another name, Microsoft, one of the bigger names that are holding up the indexes. What did it do? Well, it had a really great run, but it got overbought. That's how the market works. A good run gets up there, needs to come back down. Well, how do you make sure that you don't keep buying when you get these new all-time highs, right? You're thinking, oh, this is amazing, and then all of a sudden it turns around and you lose money and you get hurt in your account. Well, the Moxie indicator can help you with that, because here again is an inverse trampoline move. Notice this is the Moxie price trigger. It's red. What that's telling you is that the indicator has now gone negative. Energy and momentum has gone negative. And so what you can then say is, when price continues to push up over the 50 while the indicator goes down and stays below zero, that's a false long. That's a trick. And as you can see, it worked out to the downside, fell back down, and then price continued to get rejected by the underside of a downtrending hourly 50 until it came back down to the next tree branch of support, which in this case, just like Tesla, was the daily 50. And it bounced, but do we believe this bounce? I don't believe this bounce, because right here, yet again, another inverse trampoline move. So until more time goes by and different setups occur, this is just a bounce in a downtrend, and I would not be trusting a move up like that. Now, another one to be running into, Target, maybe another one of those consumer staples that we think about. And I just want to show you more things about the Moxie indicator that help tell you when a move is starting to run out and you need to start protecting your profits and be careful on the long side. How about this last massive move up here, right? Really, really great. Well, how do you know when things are going to start wearing out? Notice on the hourly chart, price kept going up. The Moxie indicator started to falter and go down. You can actually see that it looks weak. Red, green, red, green, red, green. And then you can see it was not going the same direction as price. So price kept going higher, Moxie indicator kept going lower. And then you can see in through here, it actually went negative. We got inverse trampoline moves right there. And then price ran right into the underside of a downtrending hourly 50. So that's how you make sure you get into something like that. And then lo and behold, how about on the daily chart? Another inverse trampoline move right here on the daily chart. So I'm being extremely cautious on the long side out there, and I think you guys need to be aware of that too. Now, NEO, just another little something to be looking at. I don't have the Moxie indicator on this one because I just want to show you something from a price standpoint. This is what we're seeing out there as far as things just not really getting traction. We could see there was a little bump here at the weekly 50 and the monthly 10, but ever since then, it just hasn't been working. It fell back below the weekly 50, it fell below the monthly 10, and then what did it do just recently? It moved up into the underside of the weekly 50 and the underside of the monthly 10. These things that used to be support are starting to become resistance, and we need to be aware of that. Things are changing out there. It's not a good landscape out there. We need to be very aware and cautious about this kind of stuff. So if you guys like the way that I've been talking about this, I appreciate you tuning in for the Daily 5. It's always a good time to come in through here. But if you like how I talk about this, how I see the markets, you can come and look out more information about me. You get the free newsletter that I write twice a week up here. That's the top link. And if you guys want to check in on the socials, we got Twitter and Facebook and Instagram. And every Wednesday, I do a 30-minute live session on Facebook and YouTube. And I think we also broadcast it on Twitter. So come check that out. See if you like how I view the markets. And then if you really do, come over to Profit Pilot, simplertrading.com/stocks, and you can check out the live trading. So I do that. I do 2 hours every month. I'm in the chat room all the time. I do lots of posts. I communicate to my subscribers quite a bit and give them lots of material. And I even answer questions, interactive Q&A. So I'm in the chat room all the time. People chat with me all and do that. And then real-time text alerts. So this is the kind of stuff that I send out. You guys can see exactly what's on my brain when I'm out there posting all sorts of stuff. And then we get a whole bunch of member downloads. You become a member, you can go right to all the previous stuff, all the history, and you can start just downloading that into your brain and catching up and getting up to speed. I show every trade that I take and document it. And then, of course, the newsletter that I just spoke about. So if you guys are interested, come check it out. Would love to see you guys and see if we can help you out in the market. Thanks again. Talk to you guys later.
Hey guys, Dave Keller here with Stockcharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.